Hey everybody, we're heading into January, week 5, 2019 on the S&P 500, and here is what is going on. I'm going to do a separate video from this, really diving into some downside targets so that I don't make just one big long video. This one's going to review where we're at and what to do if we have a little bit of a recovery on Monday, and we'll take a quick look at the calendar as well and explain why we might get a little reverse move back up on Monday. Okay, here's where we are at, and when we look left on the chart, back to January 15th, this was the day of the Phase 1 trade deal signing, and as you can see, this was culminated in the high of a move up from where we set our January low on the 6th. So our previous leg up was from our January low to the day of the trade deal signing on the 15th. This is the point where everybody figured we were probably going to sell the news. We were just taking our first look above 3,300 and on that day, but we pulled back and closed well off of the high. Everybody expected that this was going to be a sell the news day, but instead we came in and we had a huge gap up open the next day. Our gap up open was above 3,300, and this led us into this latest leg that only lasted a few days but got us all the way to 33.3777. So a look above that next big inflection point for us, which was 33.30. So we got our all-time high this day, but we did not get our all-time closing high. Our all-time closing high still remains back here on the 17th, the end of the week of the week that we signed the trade deal with China, Phase 1. Closed for the week and an all-time closing high, so a weekly all-time closing high, a watch, and also a regular daily all-time closing high, an ATCH, all-time closing high. So a couple of days later, we had our Martin Luther King Day holiday, came in on Tuesday, had kind of a weird day on Tuesday. On Wednesday, we gapped up open on Wednesday, made our new all-time high, and then sold the whole goddamn thing off. We came down, filled the gap, moved up off of that gap, and held a little bit of a higher close above the previous day, but this is not the kind of day that you want to see happen on an all-time high, and we did not get our all-time closing high that we needed. This led us into Thursday. Thursday opened all the way down here back on this 33.16 level. As you can see, our day after the trade deal was signed, we gapped up open, we moved up above 33.16, took a little look above here and closed, and then from then on out, this was our support until we came in on Thursday, opened on it, and flushed back down, testing the low of that gap up open, testing our 10-day simple moving average, and reversed off of that and basically testing the 3,300 handle. We got down to 33.01. We reversed, we came back up, and once we crossed this 33.16 level again, we really collected a whole bunch of new buyers. This was probably just one big ass short squeeze, and we closed up here. Then we got Intel earnings after the bell. Futures were up big time overnight. Futures ES got all the way up to 33.36 overnight, but started backing off of the futures at the just before the open, and we opened off of the futures highs. But this was still a nice big gap up open for the S&P, but that was it. That was our high for the day. We made a tiny little bit of a high above where we opened, but we sold for the rest of the day. And if you look at this, our move on Thursday from the low to 33.16 to the open on Friday was that full double up move. So this 33.16 level was key for us. We doubled up the move. It took us 2 days to do it, but we did double up the move to our high on Friday. And once we broke this 33.16 again on Friday, we flushed on down, testing the previous day's low and the 10-day simple moving average, and then we put in that amount of points down once again. So we kind of did a triple down using this 33.16 level. So from our high to 33.16, then a double down, and then a triple down. Now, what I was talking about a lot on Friday was I was jumping ahead to the next double down move, which I thought would be from a break of the 10-day. So once we got to the 10-day simple moving average, which was here when we broke it, it sank about a point, drifted down and sank about a point by the end of the day. So It closed at 33.03.59, whereas it was 33.04.50 or so when we broke it. So if we had doubled down from there, that would have taken us down to the bottom of this blue box. And look at that, it wound up lining up right exactly with our halfway back for 2020. So if we had just gone a little bit lower, we would have basically retraced half the move for the whole year, from our low back here on the 6th to our high up here on the 22nd. Halfway back between those two levels is this 32.76. We almost got there, but not quite on Friday. Instead, we reversed and held the low that we made on the 15th. So we are still kind of in here, sort of obeying this stuff that was going on in the days leading up into the trade deal signing. There is an arrow here on the chart because there was a significant thing going on that day. That might have been the Fed minutes, or it might have been the jobs report. Let's see, what is that arrow? Non-farm payrolls. Okay, so that was the non-farm payrolls day, and that was a miss, and you can see that we sold off on that. But after that, we recovered and then made our move to 32.81 or so, and got our rise up to here. And then on Friday, we retraced all of this back again. So here we are back to the scene of the crime where we, failed our non-farm payrolls number, our low of day where we back tested that on the trade deal signing, and now here we are at the end of January back testing that again. If we come into the day Monday looking bullish, we will come in flat and we will hold above 32.95, and we will go right back in that pathway, and we will retest the 10-day simple moving average. If we can regain the 10-day simple moving average, we will move on to 33.16, and if we can regain 33.16, we will take that shot at our all-time closing high and our 33.30 level. I don't think that we will make it any higher than this. I don't think that we will make our all-time closing high. I think that we have sort of set in the wheels in motion for a correction, but you can certainly trade from 32.95 on up to 33.30. Sell into that and get your puts up here for another move back down. And one of these days, this move is going to break 32.95 again, and we will handily break our low that we set on Friday as well. So if we are going to come in and go higher on Monday, we need to come in and open at or above where we closed on Friday, work through the 10-day 33.30. And looking at the options for that, I like I've got them down here. I like the 33.25 or the 33.30 calls. If we open flat, the 33.25s, they should be right in. If we open flat to slightly higher, the 33.25s will be an $8 window entry. They had really good volume on Friday. If we open a little higher, and these are already well above the $8 window, you can start looking at the 33.30s. Those will be your $8 window entry then. Okay, but I wouldn't go much higher than this because, like I said, I don't think that we're going to get another new all-time high until we get some things resolved, maybe some uncertainty lifted. I don't think that we will get there, but of course, if we do, and you're holding these 33.30s, then you've got a home run that's going to take you all the way to our next target, which is 33.59. And we've talked about that for a long time, and you can see that's really where the volume is sticking out on the calls. Okay. Anyway, that's it for the upside, and that's it for this segment of a longer weekend video. Trying something new to try and divide these videos up so that they're not just this one long droning session of listening to me for 15 minutes. Have a great rest of your weekend. As always, good luck and good trading.